we did our first Oklahoma deal that we bought in September of 2020. We just sold last October 2022. Hit like a 60% IRR, which is
Wow.
insane. And then was able to 1031 that money into a property that was 30 years newer. So it's just like a win-win all around. And I had 1031 into that property, sold that property, and then deferred the gain again, and then another 1031. So I have two instances now that I've done two 1031s with the same original cash.
Hey, everybody. Welcome to the Real Estate 101 show. I'm your host today, Patrick Donley. And with me today as a guest, I'm really happy to have on Jonathan Barr of JB2 Investments. Jonathan, welcome to the show.
Thanks for having me.
Yeah, I'm excited to have you here. I've talked a little bit with you prior to this about not meeting your mom, but you've connected us with your mom. I watched her interview at Reconvene, which was great. I'm going to have her on the show in a little bit. But I want to get started talking about you worked in the family business, and tell us a little bit about that, about her business, how she started it, how you got involved in LA doing the kind of flips that you were doing. Just want to hear a little bit more about the family business and what it was like for you getting started with that.
Yeah, so my mom and my stepdad, they've been flipping homes since, I don't know, the early 90s. So they've been doing it for 30 plus years. And then in 2008, when the last recession happened, couldn't find a job, was just graduating from college, and decided to join up with them. And we started going to the foreclosure auctions and buying tons of homes that way. And it's kind of what got me into what I'm doing now.
So tell me more about that. Like, you graduated right at the height of the 2008 great financial crisis. What did you study? Where'd you go to? And what were your kind of career thoughts coming out of college?
Yeah, I studied finance, which actually helps a lot in what we're doing now. And I think initially I was like, I don't want to work in a family business. I want to do my own thing, maybe get into like a business consulting firm. But it just was really tough to find a job at that time. And it just kind of made sense to jump into the family business. And little did I know that it was the best time to jump into flipping homes because of all the REOs and short sales and all that kind of stuff that was happening at that time. And like looking back at it, I mean, we were buying properties in LA for $200,000 that today are worth $1 million.
Right, right. And
Yeah.
so, like, growing up as a kid, were you working with your mom, helping out, doing anything like in the
Yeah, I would
summers with
like
her?
go on the weekends to look at houses or go to open houses. And always was around it, like our dinner table, there's people talking about it. So it's definitely in my blood.
Yeah, definitely in your blood. And
Yeah.
yeah, great learning just being around it like that. So when you
Yeah.
started
It's
with
second nature for me in a way.
yeah, yeah. So when you
Yeah.
started with your mom and stepfather, what was that like? You're 22 or so. What did they have you get started doing with the company?
So I first actually started more as like an agent, like showing buyers properties and that kind of stuff. And then we eventually got into the auctions and the trustee sales. So I was doing acquisitions. So we had a couple people at the auction sites. I at first went to the auction sites myself. So I kind of experienced that firsthand. And then looking at the MLS and all that. But later being in that business, it definitely got challenging working with your parents because you get to a certain point where like you kind of know as much as they know. And then you have certain ideas of where you want to take things. And it kind of, there starts to become some conflict because of that.
Absolutely. I mean, any
Yeah.
workplace is going to have some conflict, but when you involve family members, it's like a whole nother dynamic. And I
Y-
can totally empathize.
Yeah. You bring all like the history of your life with them into the business, if you like it or not. You try not to, but it just kind of happens.
Exactly. Exactly. I,
Yeah.
I worked with my dad. He had a development company and worked every summer with him. And I just remember he and his brothers getting into huge arguments. And as a kid, I was like, I don't know if this is for, for me because it's tough. It's really
Yeah.
tough and it does stress relationships. Um, and you've
True.
got a brother, right, that was also involved in the company?
Yeah, my brother who's my partner now as well. But that worked well. We've always got along really well, and I think we're also it's different dynamics because you're essentially equals.
Yeah.
So it's like there's less of a parent-kid dynamic that makes it a little easier.
Right, right. So
Yeah.
let's
And don't get me wrong, I love my mother, and she's amazing, and she's done incredible things, and I wouldn't be where I am today without all the guidance and everything she's given resources she's given me.
yeah.
But now I am happy to, be off on my own, do my own thing.
Yeah, absolutely. It's a good
Yeah.
transition. And we're going to get into that, the transition here in a little bit, but I wanted to hear more about the actual flipping business. You guys did how many flips? Like over 400, right?
We
That's
did 400 over a 10-year period. Yep.
10-year period. That's a ton of flips. Talk to us about like the systems you had in place, the process, what you liked about it, what you didn't like. Go
Ye
into that a little bit.
Yeah, so we were going to the auctions, we were buying about at 1.8 homes a month, which is pretty crazy. We had our own program and app and stuff that we had a couple people in the morning looking at properties. We had 2 people at the auctions bidding on houses, and then we had 3 property manage or proper project managers that were overseeing like 30 projects at any given time. So we had a whole operation and everything that was like it was like a factory of like churning out these properties. And one thing that also made us really successful is in the areas that we're working, they're starting to get kind of gentrified. And I noticed that people are starting to do like higher end flips, I guess you could say. Well, I noticed that like I saw one house where they did it and they did really well. And so we started doing that. And so at the auctions, we were creating new comps that weren't out there yet that we had under contract. So we were able to bid up higher that no one else at the auctions knew that they could hit that value. So we're bidding everyone out and buying way more homes that way because of the strategy that we had in place that was making us pretty successful
And so were you buying
and printing
properties all
cash.
like on yeah, yeah. So were you buying properties all on one street, one neighborhood and just focusing or were you
Yeah, it was like
all over LA?
mostly Northeast LA. So if you're familiar with LA, Silver Lake, Echo Park, Highland
Yeah.
Park, Pasadena, Altadena, some of the Northeast kind of corner.
So like you said, you're 2008, 9, 10. You're buying them super cheap.
Yep.
What tell me about a typical house. I mean, were you taking them down to the studs? What did the flip look like? Was it more cosmetic?
I mean, it was kind of all across the board. I think at first it was a little bit more cosmetic because the deals were so good. We didn't really have to do much to turn a profit. And as time went on and it got a little more competitive, we had to do like we would do gut jobs, we would do additions. It kind of was all across the board. It just kind of depended on, and we've sold properties as is too. So it was all across the board. We were able to do anything. And that's also another thing that made us successful is we could take hairy deals and make something out of them.
Right, right. So were you using just family money? Were you bringing in investors to do all of this?
Yeah,
How
we
were you
brought
funding the projects?
yeah, we brought investors that gave us the money and then we split the profits 50-50. And then eventually we were using hard money and just recycling through cash. And we'd buy properties at the auctions and have the hard money lenders give us the money for those purchases a couple days later and then take it back to the auction. So we were able to like recycle not even a ton of money.
Yeah. Wow, that's impressive.
Yeah.
Um,
It takes a special relationship for someone, hard money lender to be willing to do that.
yeah, yeah. So how long would one of the flips typically take? And you're basically doing everything in house, right? You guys are handling all of it. You're not farming anything out. It sounded like you've got
I mean, technically, there was, like, sort of outside contractors, but they essentially only work for us, so they were in essence, it felt like they were within our company, yes.
yeah. Were you guys holding on to any of the properties? I mean, you were in an area that, like you said, is gentrifying. You knew that they were going up in value. You were pushing values up. Were you guys holding on to any of the properties to for the longer term?
Unfortunately, we were not, and we should have. Like, I actually post this on Twitter all the time. If we would have kept, like, a third of the property that we flip, none of anyone in our family probably wouldn't have to be lifting a finger at this point, you know?
Right. Right.
Luckily, I did buy some properties for myself, some duplexes that I bought during that time that I held. and which subsequently I sold to 1031 into the deals that we're doing now.
Okay, we're gonna get into
Yeah,
those
yeah,
deals
we can get into that, but
and the
yeah.
1031. I wanna go into that in depth and talk about that, but I still wanna stay with the flips. The hold on here, let me think what I wanna ask here.
Mhm.
Um, as the years progressed, you're what, 2019, 2020, was it getting harder and harder to find good deals? And were the numbers just not making sense?
It was definitely very challenging. There was basically no more REOs. The flip business was definitely getting saturated because you have all those, like, s people promoting flips, you can get rich, whatever, whatever. But we had, our little niche there, and we did high quality flips. Like, I don't even necessarily call them flips. They're like almost restorations, a lot of the work that we're doing. And we had a lot of good contacts with different agents and had kind of a name for ourselves. So people would bring us stuff a lot, and we do a lot of digging. I mean, it wasn't easy. I had to look at, I don't know, probably 50 to 100 deals before we actually bought a house, which is pretty crazy. And I was actually looking at some stats the other day. I was like, how many houses in LA County did I walk into during my career doing that? And I estimated 10,000 homes.
Oh my god, that's crazy.
Yeah.
So, and were you doing the analysis on all of these? Like, were you the main kind of,
I was the
doing
main
the
guy,
underwriting
but
and
we looked at it
acquisitions?
as a team. We would kind of have meetings and kind of talk about why we think whatever and come to a conclusion, especially if it was starting to get kind of like tight on a deal and we were kind of unsure. We'd all definitely group up and talk about it and go through the numbers.
And then what role did, your mom and stepfather play? What were they up to?
My stepfather was on the construction side and design, and then my mom was kind of like the CFO, kind of making sure everything was kind of running the way it was. So she kind of had her hands in everything,
Now,
but more on
did
the financial side of things.
was she also a realtor at one point?
She was, because we sold everything in house, so she was the
Okay.
broker. And that's kind of how she started in the 80s, selling houses in like the hood of LA.
I wanted to get your opinion on this. Somebody said that you should never try to sell your own properties just because you're not going to handle the negotiation well. It's an emotional deal, and I I just wanted to hear what you had to say. Like, I handle my own sales when I do them. I know the property really well. I enjoy the sales process, but I started to think, well, maybe I'm making a mistake and leaving money on the table by doing it myself.
I mean, I have the opposite thoughts on that. I think
Yeah.
because you have so much skin in the game, you're going to negotiate harder. You're going to be that much more involved. And like, you could use the emotion to your advantage, I would say,
Yeah. Yeah. I agree with that. This
you
was
know?
this was actually Kevin Clark who said never negotiate your own deals. So,
Yeah.
anyway, yeah,
I don't know how
different.
many of his own deals he has to negotiate, but I don't
Right.
know.
Yeah, just different opinions.
Yeah.
So I wanna hear, like, how things started to develop that you ended up changing your personal strategy. How was that, deciding to leave the family business to venture out on your own? Talk to us about what you were thinking and feeling, because that's a tough jump to do, and I just wanted to hear what it was like for you.
Yeah. So, yeah, it was definitely a tough jump, but
And that was
the
when, 2019, 20?
20 to it was like basically end of 2019, early 2020,
Yeah.
was sort of that transition. Um, but yeah, it was tough. But the catalyst that made me do that is, like I said, I bought those few duplexes. I held them for 10 years, and I saw the power of long-term holding. I mean, these properties that I bought in
So what'd you buy them
2000,
for?
I think it was I mean, there were different numbers, but, like, I'll give you an example of one that I
Sure.
bought for 300,000. I put about maybe $130,000 and then eventually sold it for $1.4 million, 10. 10 years later, so I made $1 million off that deal, off
Pretty nice
one
return.
duplex. Yeah.
Yeah, yeah. And
Um,
you had
this
10 of them? Is that how many you had? Did I
No,
hear that right?
3.
3,
3.
okay,
Yeah.
okay.
I wish I had 10, but
Yeah,
I
exactly.
shoulda tried to get there. Um, and not all of them made that much. That was, like, the best one,
That was
I
the
would
home
say.
run.
That was the home run. Yeah. So I saw that they appreciated by 400%, and then
And
my wife has
what were they cash flowing in LA? What kind of cash flow were you earning?
Like, cash on the money I put was pretty high, but when I started looking at what my cash return was on the equity I had on the properties, it was probably like 3 or 4%.
Right.
So that's what the catalyst was to sell that first property, look in the Midwest because my wife has family in Kansas City, so that's why I started looking out there. Saw that I could triple, quadruple my cash flow by moving the equity from these duplexes over to a 14 unit that I bought in Kansas City. So I went from making 1,200 a month to 5,000 a month, and that was a tough hurdle to get over because everything I had done was in my backyard. But I found the right team, did the first deal, and to this day, that deal is still working out great.
So in LA, is there rent control? I mean, were you capped in terms of how much you could bump your rents?
Yeah, there is, rent control on properties that were built, I believe it's before 1978, which in LA is probably like 80% of the properties. Though now there's California rent control that kinda takes that over too. But yeah, it's 3% a year. Basically, when a tenant is in the unit, they sort of own it, and, we a lot of times, we would have to pay someone $50,000 to move out a unit before we sold it, but paying them that 50 made us another 100K on the sale, for example.
Right, right.
Yeah.
I want to hear about the sales process and then the 1031 process that you did. I presume you did a 1031 on
Yep.
selling and you sold all 3 basically at the same time?
Within a couple
Or was
years.
it
Yeah.
okay, okay, so it was kinda staggered a little bit.
Staggered for sure.
Yeah. Tell us about the 1031. We've got a lot of beginning and intermediate investors that they've maybe heard 1031, the term thrown about, but around. But what is a 1031? How does it work? What are the advantage of it? Why should you do it?
Yeah, so, 1031, basically, you can sell a property and move that profit/gain into a new property and defer the tax. You don't have to pay the tax on that gain, as long as you move the money into another deal. But the caveat is this time constraints. So in 45 days, you need to select at least 3 properties, one of which that, or you could close all 3 depending on what it determined, and then close within 180 days, and then the purchase price of the new property has to be greater or higher than the old one, and then you have to have greater or higher debt than you had previously on that property.
So it's a
S
little bit of time pressure, right?
Yeah, you basically, like, ideally, you have the property you're gonna buy before you even sell the other one.
So is that what you were doing? And how did you end up in your first purchase was in St. Louis, right? How did you end up in
Kansas
the
City. Yeah.
Oh, Kansas City, I'm sorry.
Yeah,
First
yeah.
purchase was in Kansas City. It all seems like the same to me, kinda.
It's in the same state.
Yeah, yeah. So you in Kansas City, how did you, decide Kansas City, the Midwest? What was that how did that end up coming to be?
Yeah, like I said, my wife has family there, so that's why I initially started looking there, but just started looking at the numbers and they made sense. And then just going there and feeling it out and seeing, oh, this is actually a pretty cool place. They have cool bars, restaurants, coffee shops. There's things going on here. It's not just like cows and nothing going on. These are actually legitimate cities that people want to live in, that are affordable, that have room to grow still, and are population growth, all that good stuff that you want to see.
So how did you find that first deal? You were just there visiting your mother-in-law, your and family, and just had some free time and you were out looking around? Is that how things unfolded?
I mean, I was just kinda bored and started talking to or not looking at talking to brokers right away, but kinda looking at deals that are out there and then connected with some brokers, and the deal that I ended up buying, I had actually walked it before they were done doing the rehab, so basically I bought a property that they flipped to me, essentially. It was everything was done to it, plumbing, electrical, all that kind of stuff, and it was still able to get double digit cash returns. This was like towards the end of 2019, so it was like when rates were a little bit higher, and those there just wasn't as much competition on from out of state people at that moment.
So
And yeah, and that's kind of how that happened.
so how did you end up funding that deal? I mean, you had a decent chunk of change from the 1031 to work with. What did that first deal look like? How many units were they? And then I want to get into how you manage them because you're doing that
Yeah,
remotely, right?
I am. So moved about 500K into that deal. 1.6 million was the purchase, 14 units, and it makes about 60,000 a year. So you could do the math. I think it's like 12% cash on cash return, which hard to do these days, but it was
Yeah.
just a very unique situation that I got into there. And the loan, and then a few years of interest only period as well on the loan, which kind of helped it get to a better place before that kinda burned off.
Would you advise investors to do interest only if they can?
Yeah, I mean, we did a loan. One of the last deals we did is a full term interest only, and I think some people are like, "Well, you gotta start paying off your debt." It was like, well, with as prices go up and inflation's high too, you're eating away at that debt anyway, so I I always suggest going interest only if possible.
Yeah. And so tell me how you decide you and your brother to do this at the same time together, or did that kinda happen over a period of time? And how did
So I bought that property in November 2019 with my own that was my own property. I bought that with my own 1031 funds. And then in January of 2020, we left the business. And then September of 2020, we did kind of our first kind of larger syndication project in Oklahoma City. And that was also some 1031 money into that property. And then we raised a little bit of money from other people, but it was tough for us to go like, "Hey, you guys are like flipping in LA and now you're buying large apartments in Oklahoma." It was like pretty tough for us to raise on that first deal, and we only raised about I think 25% of the equity from other people. But it's what kind of got us our start in that business.
did the skill set that you developed flipping 400 homes, was there any carryover to doing the multifamily? I mean, in terms of there had to be to some degree, right? Like analyzing deals, like tell me about that. Like what skill sets are applicable in both flips and multifamily?
I mean, construction, wood construction's kind of the same with houses and buildings.
Yeah.
So really good at I think one of our strength was like due diligence in the flip business. And so due diligence in the apartment business is not that different. It's like a little more complicated, I would say. But also I think another of our strength is just kind of looking at it and kind of thinking outside the box. Like that first deal we bought, we actually ended up putting a studio unit in an old pool room that because the property used to have a pool, but it didn't have a pool any longer. But there was all this extra space, and we're like, we could do something with this. And we added an extra unit, and that brings $600 a month times 12, and you divide that by a cap rate. You're
Yeah.
creating quite a bit of value by not even that big of a change.
Right. Right. Tell me how the management remotely is going. Like that it's got its challenges, I'm sure. What are the pros and cons of it? You know, you're living in Bend, Oregon. That's pretty awesome. And
Yeah,
you're
love it.
skiing and having a
Yeah.
good time.
Yep.
But what are the challenges of managing stuff remotely?
I mean, yeah, if something serious comes up, you can't just go down the street and take a look at it. You have to kind of rely on your manager and their expertise and yeah, and we've had issues with management as well. We actually just let go of our Oklahoma assets the manager we had there and are bringing on a new one. And I think we did a really good job bringing on this new manager. We interviewed 4 different, managers. We talked to references, we talked to brokers and trying to get a feel of who the best person for what we're trying to do is out there that has the best systems. And, yeah, you have to have referrals, you need to do your homework, and you need to just work really hard to put together the best team you possibly can because you're not there physically and you can't do a lot of things that maybe you could do if you were there.
So you said you had to when you buy a place, are you inheriting, like, existing property management ever?
No. We're
No.
always putting our management, though that first KC deal, the management company was in place,
Mhm. And
and
that's
I
who you
kept.
got rid of or no?
No, that's separate. In Kansas City is different managers than the Oklahoma stuff. But yeah, so that manager was there and they were actually good. So I think I just got lucky, honestly, with that
Yeah.
one.
Yeah.
Because they've been good. And another part of it is we're just super involved. We do weekly calls. We have like KPI reporting, like they're telling us what our occupancy at, what our delinquency is at, how leasing is going, all that kind of stuff. I mean, we're calling, we have emails almost daily, sometimes text messages with managers. I mean, we're super hands on. So that's a big thing too. Is like you can't just let the managers just do, you have to make sure you need to be on it too, and that's a big part of the success.
And how often so the different cities you're in, tell me again, it's Oklahoma City, Norman,
And Kansas City,
and Kansas City. How often
correct.
are you headed there?
Once a quarter.
Once a quarter?
Yeah. The lucky thing is my brother is not married and doesn't have kids, so he can go more often than I can.
That's nice.
Yeah.
So you send him pretty more often? That's cool.
A little
How
more often, but I wanna get out there too, you know?
Yeah, yeah. So
Yeah.
how are you guys breaking up the responsibilities between you and your brother?
He does more acquisitions. I do more like the marketing of our business for investors and some of the investor relations and some of the accounting stuff. But at the end of the day, we kind of have our hands in everything because it's just the two of us. We have no employees, but we third party manage, so that's part of it.
Right. I wanted to hear if there's anything you miss at all from the flipping days. Do you miss that at all in being in the family business, or is it good to move on to the next thing?
I mean, it's more good to move on, but I'd say that the main thing I miss is we did some really high design projects. I mean, we did some $4 to $5 million projects in the Hollywood Hills, and so we did some like really fun, amazing projects that some of them got awards and got into different blogs and all that kind of stuff. So it's cool to be part of that. And now we're just kind of doing workforce housing. It's pretty vanilla kind of stuff, but my life is better,
Yeah, yeah. So
you know?
definitely. So the cash flow is greatly increased. You guys
Yeah.
were, as a flip, the downside is it's, a lot of people say it's you're creating a job, it's and it doesn't end. You got to keep it pumping. I heard you say like you had to sell what did you had to sell like 3 houses a month to pay for overhead at one point?
Yeah.
Did I
Yeah,
hear that right?
we had to do 2, 3 deals a month just to pay for everything. So, it's like we had to do 4 deals a month just to, like, make some money, basically, you
Yeah.
know? And that's a pretty stressful and high pressure plate space to be in. And, yeah, like you said, the flip business is a job. You have to go to the sites all the time. There's things happening. You're selling properties. It's a full-time job when the apartment stuff is it's still busy, but it's less like things have to happen today. It's more like you do as much as you need to do, you know?
Yeah, yeah. Do you think doing flips though is a good place to start for somebody just getting started?
I think it's a good way to create capital, if I hadn't been in that business, I wouldn't have any cash to do what I'm doing today. you
Right.
know? So I think it's a good way to kind of, like for someone just starting out, doing a flip and maybe using part of the profits to do another flip and use part of the profits to park into something long term and keep on doing that until you could focus more on long term investing, I would say.
Right.
But yeah,
Right.
you're not gonna just start out, having all this money, so you need to create the money in some way, you know?
Exactly. Exactly. And the flips are taxed as talk about the tax advantages of multifamily versus a flipping business, because there are some tax advantages.
Yeah, because most flips you're doing in less than a year, so you're basically getting taxed as ordinary income, which is, depending on your tax bracket, can be, 30-40%, which is huge. And then with the apartment game, we're like I said, we did a 1031, so we deferred all those gains, and then we're also doing accelerated depreciation. So usually depreciation, which is a paper loss essentially, you depreciate over 27 and a half years, but what accelerated depreciation allows you to do is accelerate a lot of that depreciation in the first year. So I think it's like 20 to 30% of that depreciation in the first year, so that basically what happens is someone invests like 100K into our deal, they're getting 60 to $70,000 in losses in that first year, paper losses, not actual losses, and they can carry those losses forward for 20 years. So the idea is that all the cash flow you're making for years to come, you're not paying taxes on. And then obviously always everyone's situation is different. So I always tell people to talk to their CPA and
Right.
kind of do their own research too. Don't take my own word for it, obviously.
Yeah.
Um, and yeah, so it's basically we pay little to no tax at this point, the way things are structured. Though accelerated depreciation, bonus depreciation is being kind of drawn down right now.
Mhm.
And we'll see if they'll keep it going in the future.
I had Yona Weiss on the show here a couple weeks ago, and he does cost segregation
Yeah.
studies.
Yeah.
Is that what you're talking about? Are you doing cost segregation
Yep.
studies to get the bonus depreciation and
Yep.
the accelerated depreciation?
Correct.
Yeah, so it's totally worth doing, right?
Right now it is. I mean, I think later it's going to be more of a cost benefit analysis as that gets kind of drawn down.
Yeah, and so explain a little bit more about how cost segregation works. You're depreciating. Explain. It's like carpet, and there's only certain things that can be accelerated on the depreciation schedule, right?
Yeah, it's kind of like it's like an engineering study where they, break down, the electrical, the drywall into different buckets, like a 5-year bucket depreciation, 15-year, 27 and a half year. And so the cost segregation study kind of allocates them appropriately so that, you could offset those things earlier in during the life of the investment, which you want to do because you rather offset costs earlier because a dollar today is better than a dollar tomorrow.
Yeah. Um, he, Yona made this interesting point. He said most people don't even know about cost segregation studies and the advantages of doing this bonus depreciation that you're talking about. He said, "Oh, ask even CPAs. Like they may have heard of it, but don't really understand it." And it seems like it's a a really wise thing to do. Is there any reason not to do a cost segregation study in your mind?
I mean, maybe for like a small property, like a house or a duplex, maybe it won't
Right.
make sense. That's the only, because because of the cost of the study and all that.
And
That's
which
the
is
only
what?
time.
About how much would you pay on a study?
I think for our properties is around 4 grand.
Okay. So I wanted to hear a little bit about, we're in a rising interest rate environment. What's it like right now in terms of your investors? Are they skittish to do new deals? Is it harder to find new deals? Talk to me about like just what you're seeing in the market right now in the Midwest.
We've taken the content of this podcast and put it into written form that can be read in only 5 minutes per day. Over 30,000 readers are currently loving it. Get it directly to your inbox for free by simply clicking the link in the pop-up on this video and then entering your email. It is that simple. Just click the link in the pop-up, enter your email, and start knowing what's happening with your money.
I mean, I think definitely investors are a little bit hesitant right now. I wouldn't say they're skittish, but if they are going to invest, they're going to invest less dollars than maybe they were doing, a year ago. And yeah, it's really tough to make deals pencil right now when you have 6% plus rates and sellers still want what they wanted last year, you know? And it just like it doesn't pencil. But like for example, the deal we're closing in a week or two in Kansas City, we're assuming the debt at 3.99% that still has 6 months of interest only period. Um, and that's what kind of made the deal, even though we have to put a lot more money down because of the loan amount based on the difference between the loan amount and the purchase price. We're ending up putting, I think, 40% down, which is larger than what we've put down on a lot of the other properties. But with that kind at 3.99%, that spread between what we can get today and what that is like it made the deal happen.
Right. And how are you finding these deals? Or do you have brokers that you've developed relationships with that are bringing them to you? Or are you doing your own research?
Mostly brokers that are bringing it to us. A couple people have connected with me, and we've done 2 deals now that people connected with me on Twitter and brought the deal to us.
I wanted to talk about that. It was later in the, but
Yeah.
let's hit Twitter. Like how has Twitter impacted your business? Because you're fairly active.
Yeah, I mean, it like I said, it brought those deals. I've met a lot of investors. I've made a lot of good friends that now I've met in real life at Reconvene, for example. Um, and yeah, it's helped kind of build my business. I kind of did a study of where kind of our funds come for our deals, and so a third of it has come from my brother and I. A third of it has come from like friends and colleagues, and a third of it has come from people I've met on Twitter now.
That's wild.
Yeah, it is pretty wild. You're meeting
And would
people
you
on the
say
internet, and they're giving you money, so it's crazy.
yeah, it's really crazy. So, and it's just they're seeing your content and seeing your tweets, and they're reaching out to you by DM and saying, "Hey, I'd like to get
Yeah, and then we
involved in your
kinda have, like,
deals."
a funnel on our website where they download an ebook and some emails go out. They set up a call with me. They get those interactions for, like, months before, so it doesn't just happen like
Yeah, no,
that
right.
easy, you know, and maybe they've been following me on Twitter for 6 months, and then we interact for another few months, and then finally they invest in one of our deals.
Yeah. Tell me about you mentioned a tax strategy book. Tell me about that. How did you write it yourself? And
Yeah,
what was
I wrote it myself, so it's called the Tax Stack Strategy, and you could download it on our website as well.
what's
So
it
it's
go
about
into?
it goes into 1031 exchanges, accelerated depreciation, which we touched on, and then also solo 401k. So you could convert your 401k into a solo 401k, so you could self-direct into real estate deals or other kind of investments,
And what's the
which is
advantage
huge.
of doing that, changing it from a regular 401k to a solo 401k for people that don't really understand the difference?
You just have more control, and hopefully you're gonna be able to beat whatever your 401k is doing.
Right.
Yeah,
Right. And do you
it's
do you
more
feel
fun.
like it's way more fun? Do
Yeah.
you feel like in real estate you've got way more control than do you invest in the stock market or anything like that? Or
No, I
would you
don't.
rather have the control that you
I
have
I
with real
just
estate?
I just like investing what I know,
Yeah.
basically, you know?
Yeah.
The only other thing, and we've talked about it before, is I invest, like, maybe 1 or 2% of my net worth into Bitcoin. That's about it.
In case that asymmetric risk pays off, right?
Yeah, I mean, so far, it's actually paid off pretty well, so I'm happy.
Yeah. Oh, you got in early?
Yeah. Yep.
Nice. Nice.
March
Yeah.
2020. So, there you go.
Yeah,
It's a good
that's a
time.
pretty good time to buy. It's like I think 39 or 3,900, maybe 4,000, right around there. So that's
I
a
think it was around
decent.
6, so
Okay, so yeah,
maybe it
it
was
definitely.
April. I don't know. Yeah.
Yeah, yeah, no, it's,
Yeah.
that was a great time to load up if you had the foresight to do that. Hard to do though, when everything's
I
plummeting
didn't
and
have the
like
foresight, I just happened to have a few bucks at that moment, so I was like, "Why
yeah,
not?"
yeah. Well, how'd you get into it? Did you have friends that were pushing it or
I have a friend that's super into it, and he's always in my ear telling me to buy it, and I was like, "Alright, uh, you you're a smart guy. I think I'll at least have to buy a little bit if you're so all about it."
yeah, is he a real estate guy also?
No, he actually is like a e-commerce guy.
So, yeah, we've got a show on Bitcoin called the Bitcoin Fundamentals that's I started watching it like in 2000, I don't know when it came out, 17 or 18, and like,
Uh-huh.
kind of got turned on to the whole Bitcoin scene. So it's not widely it's kind of viewed poorly, I would say, in the real estate Twitter community. Is that your experience?
I mean, I don't think people are fans of it that much in the real estate space. It it
Yeah.
it is pretty speculative, I would say, but so can real estate be that way. Um, but, it's good to diversify a little bit.
Yeah. Yeah, so this is a real estate show, not, Bitcoin. So let's jump back
Yeah.
to real estate. What's your, like, longer term plan with the apartments? Is there an exit strategy? It sounds like you're just gonna hold them, right? Or what's the plan?
Yeah, I mean, our kind of plan is, hold properties longer term, but refinance and return most of the capital within 5 years, and only sell if it's like an older asset to buy something newer, which we did. Our first Oklahoma deal that we bought in September of 2020, we just sold last October 2022. Hit like a 60% IRR, which is
Wow.
insane. And then was able to 1031 that money into a property that was 30 years newer. So it's just like a win-win all around. And I had 1031 into that property, sold that property, and then deferred the gain again, and then another 1031. So I've done like I have two instances now that I've done two 1031s with the same original cash. If that makes
That's
sense.
wild. Yeah, it makes sense,
Yeah.
total sense. So is
Yeah.
there a time period? Like, how does that work? Do you have to hold an investment for a certain period of time before you do another 1031, or is there no time limit on
I've
that?
I've heard some, like, mixed things on that. I think you do wanna at least hold it at least a year, ideally a couple years, which we did.
Yeah.
Um, because yeah, I've heard some kind of mixed things on that.
Yeah, I've heard the same. I'm in the middle of a reverse 1031, and I've heard the same. Like 1 or 2 years, you probably need to hold it before you do anything. So
Yep.
we'll see. Um, you started into the flip business in 2008. Do you see any similarities now? What's going on now with what the real estate market was like back when you first got started?
I mean, not really, just because then the reason why we had that recession is because people were able to get loans willy-nilly.
Yeah.
It doesn't matter how much money you made, and it was just a bunch of bad loans, and now we have good loans, and it's really strong. So I think the residential home space is not going to take a big hit, but when you see the commercial side, I think there's going to be some distress there, just because there's a lot of people that took out bridge loans. And for your listeners that don't know what a bridge loan is, basically it's a high loan of value loan, that's meant to like get you over like doing work on a property and then doing a refinance into a more permanent loan. So a lot of the times these rates are also floating. And as you know, rates have skyrocketed over the last 12 months. So a lot of those loans are probably underwater. Like the loan amount's probably even more than what it's worth. And they went from having a 5% loan to now they probably have like an 8% loan. And they're gonna be, and a lot of those loans are coming due. So a lot of those people are gonna have to do something or recapitalize somehow. And so I think there's gonna be some opportunity there because of that.
Yeah, I think I saw Nick Huber is trying to start a bank and like providing bridge loans to this kind of situation. I don't know if you saw that, but
I saw him, he was like starting like 6 businesses or something, which seems kind of insane.
yeah,
But
it's throwing a lot at the
but
wall.
it sounds like he's having other people lead it, and that he's probably just putting his, like, marketing side behind it
I
is
think
what
that's
it.
exactly what he's doing. He's got
Yeah.
an equity stake and he's having other people, run the thing and, you know,
Yeah,
uh,
which can work, but you still have to do something.
right, right.
Yeah.
He's actually
Yeah.
doing a cost segregation company too.
Yeah.
Yeah. So got his hands full, I would say.
Yep, yep.
I was kind of just looking at your Twitter feed today, and you talked about your why. And there's a book called from Simon Sinek wrote it. It's called Start with Why, which is a great book. I had Antonia Botero on the show, and it came out last week. But she talked about her why, and I just wanted to hear what your why was for what you're up to and what you're doing.
Yeah, I mean, ultimately for me is I have monthly cash flow goals that I wanna hit, and those goals are in place because I'll be able to pay for, like, the lifestyle I wanna have and the freedom and provide for my family the way I want to provide, and then still have some money left over to invest in other people's deals or continue to do our own deals. But maybe we become more picky at that point and only do like crazy good deals because I don't really need to grow it much more. And luckily for me now, we've gotten our portfolio. We're about to close this next deal. We'll have about 420 units in the Midwest, about $35 million in assets under management, which we own more than half of, because of the money that we've put into it. And I don't need to do another deal, which is a nice place to be, but we still want to grow. And we want to grow to 100 million in assets under management. Probably end up being around over 1,000 units, maybe 1,200 units or so.
And you're at what, 300 and some right now with
420 and 35
420,
million. Yeah.
420 and 35 million,
Yep. So
and,
we're
and
like
want to grow
a
it to
third
100.
there.
Yeah, a
Yeah.
third there.
Yep.
And then
In
do you
in
think
two
you've
and a
got
half years. So not bad.
that's a lot of growth.
Yeah.
Can you do it?
Yeah.
You can do it.
Yeah.
You've got
I-
the deals, you've got the investors, you can make it happen.
We're on track to get there for sure.
That's awesome.
The
That's
goal is
awesome.
to get there probably by the end of 2025.
Okay.
Yeah.
Yeah.
And that tweet that you referred to, like, I think, like you said, the why is so important because, like, especially in the real estate business, it's not like rainbows and unicorns all the time. It like gets really tough,
Really hard.
and when it gets really tough, it's like you need something that's higher to get you through all that. You need something like, this is my goal. This is what I need working to get to. I know this is tough right now, but I'm gonna get through it because that's where I want.
Yeah. 100%. I agree with that. I'm going through
You
that
know?
right now. I've got tenants that left one of my rentals, and it's just like they just trashed it. It's really in bad shape. And the first time you walk in, it's just like, oh my God.
Yeah.
So
Yeah.
yeah,
I have countless stories like that.
I'm
So-
sure. I'm sure. Yeah, it's brutal. But yeah,
Yeah.
to your point, having that why of like, you having that long-term goal of the cash flow to fund your lifestyle, which, kind of makes the tough days easier to get through.
Yeah,
Do
and
you
then, like,
think
I just actually retired my wife too, which has been great for our family.
that's
She's
awesome?
less stressed.
Yeah.
Has time to, like, take care of herself, like, do all the things she wants to do for our family, and it's just been and we even have more because I have flexibility with my work, and she's not working anymore. Like, we've been spending a lot more time with each other, and it's just been absolutely amazing.
That's awesome. What was she doing? What was her career?
She was in the healthcare industry, like healthcare tech,
Okay.
implementing Epic systems in clinics and stuff, and doing some coding and reporting and all that kind of stuff.
And was that always one of your goals, was to be able to allow her to retire to focus on and you've got how many kids?
Honestly, it
2?
wasn't. We have 2 kids.
2,
Honestly, it
right?
wasn't, but we just got to the point where, like, it just didn't make sense for her to work anymore. It's like she was
Yeah.
just too stressed and
Yeah.
couldn't couldn't be a good mom and be a good, like, employee too. It was just really tough, and we just got to a point
Yeah.
where it just, like, didn't make sense anymore.
Yeah. It's really tough to do it all well. Something has to give, when you're being stretched thin.
Exactly.
Yeah. I wanted to know, you mentioned the $100 million number. Do you think you'll be able to quit? Like, do you have a cash flow number where it's like, that's enough cash flow, I don't need to do anymore, and like you're it's not that you're hands off, but like you're not continuing to try to grow the portfolio?
Yeah, I mean, that's the plan. Just I mean, maybe we'll still do a deal or 2 here and there, but it'd be very selective and very picky, or not quite sure what we'll do at that point, or maybe become a professional LP while still actively managing what we have. I mean, if we have that many assets under management, it'll still be like a decent amount of time that we have to put into it.
For sure, for sure. Do you
Yeah.
think you'd miss the deal and like the thrill of the deals and like that action? Is that something you like really love?
I do like that, and it definitely, like, kinda gives me a rush, when
Yeah.
a good deal comes through. It's pretty
Yeah.
exciting,
Yeah. Yeah.
But I think I'll find other things to kind of keep that going in some other way, other businesses, whatever. I'll figure out something to keep like, I'm definitely never that person that's gonna be able to just sit on the couch and do nothing. That's for sure.
Yeah. I wanted to get into your advocacy for men's mental health. This is really an important area for me. I actually listened to a podcast that Chris Powers did last night, and he talked about just crashing and burning in his career and his personal life, just like had too much going on and just burn out. And he was like really open and raw and honest. And I think it's easy to see guys and women on real estate Twitter and feel like they've got it all figured out. And that's often, it's not the case. So I want to hear how, a little bit of how you got involved and interested in your advocacy for mental health.
Yeah, so in 2015, we were still going to the foreclosure auctions, and when you go to the foreclosure auctions, um, sometimes second loans go to auction, so there'll be the first loan, and then there'll be a second loan behind it. And we bought a second loan when I thought it was a first loan. I got bad information from the title company. And with the trustee sales, you can't get title insurance, so it's not like you get covered for that in a normal real estate transaction. And so when we had to sell that property later, we ended up having to pay off that first loan, and there was a substantial loss there. Um, was working with an investor that just like took it very badly, and I was in my late 20s and basically kind of attacked me, and I just had a lot of shame and guilt from that whole experience. I went into like a depressive episode for a few years where I couldn't even really get out of bed. And not like for 3 years straight, but like off and on during those 3
Yeah.
years. It was
Yeah.
up and
A
down.
rough
And
road. Yeah.
and yeah, and I just went and that's why and I went through therapy, different kinds of medications, retreats, like I went inside and figured out a lot of things, and that's why my why and my goals are such the way that they are, because I realize, like, I don't wanna build this, like, crazy portfolio. I just wanna create, like, even it's still a large portfolio, don't get me wrong. It's still, like,
Yeah.
we're still reaching high, we're still going somewhere, but, like, for me, it's more of about a lifestyle and creating it's more about creating the life that I want than, like, some ego trip of building this huge portfolio. And I think that as men in the business world, we're not like connected. We're just like gun ho. We got to do all these things, and we don't like we're not introspective enough when we're not building. We're not like methodically building a way that's like best for ourselves. We're doing it a lot of times for what we think the world will see as best for us or something. You know?
Yeah, that's exactly what Chris was saying. Like he was so concerned about what everyone else thought about him, rather, and it was just like completely somewhat image oriented in a way, rather than just being like,
Yeah.
what do I feel about myself? What do I think? And
Yeah.
like, how does it sit with me? Like, screw the world.
Exactly.
Like,
Yeah, exactly. Like, you need to build the life that you wanna build, and it maybe it is that billion-dollar portfolio, and maybe you're that special person that's gonna get it there, but for me, it's just, like, living a lifestyle I wanna live in the place I wanna live to be able to do the things that I wanna do, but still challenge myself and grow and build something.
it takes a lot of courage to talk about this. Were there anybody like? Did you have any influences that encourage you to talk about the experience of depression?
Yeah, Sean Sweeney is one person that's active on Twitter that's kinda had some mental health stuff, and
Yeah.
him and I have talked a little bit. And there's a couple other people on Twitter that kind of, motivated me to talk about it more because, the reason why I talk about it is hopefully my experience could relate to some other people that are struggling too, so that they could they can know that there's hope and that they'll get better and they'll be better off in the long term because of it. And I don't think the depression stuff is a weakness. I think it's actually a strength because like I naturally I'm a person that will just kind of go and keep on going, and like the depression thing actually like kind of forces me to like slow down and kind of reflect and kind of realize that maybe I'm like going too hard, you know?
Yeah.
And so it kind of ends up being a good thing in a weird way,
Yeah, I
even though
think
it
there's a lot of
sucks.
it absolutely sucks. I've been through a couple
Yeah,
episodes myself, and it's brutal to go through. It's brutal for the people around you. You know,
that too.
if family has never experienced it, it can be like really hard to see this guy who's like ambitious and hard charging and on the go all the time. All of a sudden, just being able to be like not do anything like that. That's like hard to if
Yep.
you haven't been educated like in mental health issues. It can be tough, and
Yep.
um, I do think it's great that like guys like you and Sean are open about it and talking about it to get more awareness out there because it happens. It's it like you said, it sucks to go through, but there are gifts to it as well.
Yeah.
Um,
And that's actually one thing, like, once I get to that goal I wanna hit, like, doing something in, like, the mental health world with men in the business world. Not
yeah,
sure quite what that means yet, but to be involved in that in some way would be I would get a lot of, like, a lot out of that.
yeah, yeah, that'd be awesome. That would be a good why too to like your next why.
Yep,
Um,
exactly.
so do you have any kind of like practices that you implement? You mentioned a few things pretty quickly, but I wanted to really kind of touch on this. But do you have any practices that you do or things that you implement in your own life to not prevent another depression, but I guess in a sense to make sure that you are functioning on all cylinders and maximizing what you're able to do?
Yeah, I think I'm not drinking. I'm keep active, ski, rock climb, um, you know, do things, walks. Like I'm huge on walks because it makes me think through things really well. It helps me clear the mind, but it's not like so taxing that it's like exhausting either.
Mhm.
Uh,
Do you take your like are you listening to anything when you're going for a walk or is it just
I'd
you and
say
your
it's like
thoughts?
50-50. Sometimes I'll listen to a podcast, sometimes I just won't, and I'll just, like, let my mind do whatever it's gonna ruminate in, and a lot of times I figure out solve problems that way, but also, like, intense workouts help kinda solve problems because after you have those endorphins going and you could kinda really think through some things or, like, things pop into your head that wouldn't have otherwise popped into your head.
Yeah.
And so just making sure that, self-care is very important, eating healthy, like taking care of yourself, like taking a me day if you need it. And just building and creating good relationships and people around me that could support me because I mean, we all go through tough times and it's not
Yeah.
like always good and you just need the right people around you to support you through those tough times.
Yeah. Yeah. And so that for that you said that was 2016 when you first
2015, yeah, and I've
2015?
kind of gone through little things since then, but going to therapy regularly and just talking about things, and another thing that it's really helped me with is just, like, it's made me a lot more empathetic towards other people. I was like, "Oh, why
Yeah.
is this guy, like, being maybe he
Yeah.
didn't sleep well, maybe he's going through
Yeah.
something," like, those thoughts go into my head instead of, like, this you know?
Yeah, I totally agree. I think like it does develop a compassion that you may have not had otherwise. I know for me, in my case, I didn't have the compassion that like before a depression as I did after going through a brutal one. It softens you, or I don't know what whatever. But do you think? I'm curious. Somebody asked this, Chris, like if because he's kind of softened up a little bit. He is more compassionate. Has it affected your business life at all? Like, is it in a sense, like, made it a liability that you've got compassion and empathy, or is it completely the opposite?
I think it's the opposite. I think people
Yeah.
could feel it in you and they like, "Oh, this guy, like, kinda sorta cares about me. He's not just,
Right.
like, trying to get everything he can out of me," you know?
Yeah.
And
Yeah.
I think it just makes for better conversations, deeper conversations, and, everyone just gets more value.
Yeah. Yeah. Yeah, it's definitely a multi-pronged approach, I think, like you were sharing all the different things you do, like, to manage it, and it definitely has its
It's hard
gifts, like
work
you
to
said.
keep it going, you know?
It
It's
is. It
it's
is
like you
work.
gotta work at it every day. You gotta keep going, keep keep those routines, keep doing it,
100%, 100%. So, yeah, I just want to thank you for sharing because
Of
I just
course.
think the more people share about it, the better, and it takes courage to talk about it, and hopefully, if it helps one person today, like we've made a dent.
Yeah, I mean,
So
when I posted that Twitter thread about my whole experience, I was over the moon how people were supportive
yeah,
and I got so many DMs, people sharing about their experiences, and I think a lot more people deal with it than they admit because it's kind of has a stigma for sure.
I completely agree. I completely agree. I
Even though it's
wanted to,
becoming less so, as it's becoming more open out there.
yeah, yeah. But the stigma is still there, and it's still very difficult to talk about. I mean, this is kind of challenging for me, honestly, knowing that this is going out to however many people watch it. But like,
Yeah,
it's difficult to talk about. But
definitely.
good stuff. I wanted to jump into the fire round here that I've got for you.
Okay.
Um, sounds like you are into podcasts and learning, and I want to hear about like a most impactful book or podcast that has made a big impression on you.
I really like the psychology of money because we're just talking about that,
Yeah, yeah,
like
yeah.
why do you actually want to make this money and what is it going to do for you, right?
Right, right.
And why I think it also goes on into like why certain people are good investors, et cetera, which is cool. And I think
It's a
you said you've read it before too, right?
Yeah, yeah, it's a fantastic book. I listened to it on Audible. There's not a lot of books I will listen to twice. There's a handful though, and that is one of them. Morgan Housel is the author, and I think I
He's a
mentioned
great writer.
he's a great writer. We've got a newsletter called We Study Markets. It's free, and we've covered a lot of his stuff, chapter by chapter in that book.
Hmm.
I did one. His last chapter is called Confessions, like how he manages his own money, and it's a great chapter. Like it's just how he thinks about his own money and manages his financial life, and it's a great book. How
Another book
about
I like is Shoe Dog, the Nike
Oh
story
yeah, yeah,
by Phil Knight.
Phil Knight.
Amazing. Has nothing to do with real estate, but it has a lot to do with business and just kind of being, um, like being in the trenches and getting things done.
Yeah, isn't there a movie coming
Scrappy.
out?
He was super scrappy.
Super scrappy, right? Isn't there a
Yeah.
movie coming out about like called Air or something like that with Matt Damon and
Oh, yeah, about the Michael Jordan shoes, I think.
yeah, yeah, I think
Yeah, the
so.
Nikes. Yeah,
And
I think I saw that.
he's got a there's got to be a Phil Knight in the movie. So
There's I would assume so. Yeah,
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 and I think that's
yeah,
another thing that's made us successful in our business is we're pretty scrappy. We get in there. We like, before we fired our old manager, my brother was working and leasing units on site on one of our
uh,
properties, and that was very enlightening, and we learned a lot, and you gotta get your hands dirty sometimes and get in there, you're
yeah,
not too good for any role that is being done,
right.
in your business.
Right, right. And
Yeah.
the employees, I think you gain a greater respect by being like jumping in like that and managing stuff, like rather than just offloading it to people,
Yeah,
like
much more
yeah,
respect, for
yeah.
sure.
Any other books that come to mind?
That's it at the moment.
Cool. Those are good ones. What about your best investment? You've had several, it sounds like here lately, but I don't think you've mentioned your best investment.
Honestly, my best investment was the house that I just sold in California that I bought in 2013. We put a lot of money into it, but that that property I was able to sell and move that money into the property I bought in Oregon and still have money on the side to continue to invest in what we're doing. And the only reason why I bring that up is because a lot of times people say that your house is not an investment, but it totally is. Like anything
Yeah.
you hold long enough is going to be a good investment, basically
Yeah,
in the US. Yeah.
it's like the Robert Kiyosaki thing, the Rich Dad Poor Dad. Like he says that your house is a liability. It's not an asset. And I
Yeah.
that was my next question. What controversial opinion do you hold that the real estate world may not share? Do you have any other ones like that? That is maybe one, but I agree with you. Like I've done well on my own home, so I
Yeah.
don't know what he's talking about, honestly.
Yeah, and then what's actually controversial, maybe not on Twitter, but just, like, holding, like, not maybe not forever, but like 10 plus years. That's like very unusual, you
Mhm.
know, because
Yeah,
most people, like, especially in the syndication world, they're holding for 5 to 7 years because a lot of times on the back end, that's where they're making their money.
sure.
But in our particular deals, invested so much money into the deals that we're in it with our investors to go into the long term, you know,
Yeah, yeah. Kind of a Warren Buffett principle, just long-term holding, like never sell. Maybe never, not never, but hold
strategically
long
sell
term. Strategically. I like
to
that.
1031 into something better. There you go.
Exactly, right.
Yeah.
Keep that rolling. I love it.
Yeah. Keep it rolling.
Yeah,
Keep pushing the can down the road, basically.
exactly. Last one here. What does success mean to you?
Um, that one is one I'm always still figuring out, but like I said, is like to get to my goals and the why and all that kind of stuff that we talked about so that I could have the freedom and lifestyle that I want to have and have the people I love and people I want to be around close and have that time to actually spend with them. That's success for me.
Yeah, that's great.
Yeah.
That's great. I want to kind of wrap it up here. So I really want to thank you for your time and reconnecting today. This has been a lot of
Yeah.
fun talking with you, and thanks for connecting me with your mother, Marissa Solis. That I'm going
Yeah.
to talk to her in a week or two, and yeah, it's just been fun.
Cool. Yeah. I feel
Um,
like we've gotten to know each other pretty well, actually.
yeah, it's really cool.
Yeah.
So for the anybody that would like to reach out to you, maybe they're struggling with a tough time.
Yeah.
What's
I'm
the
happy
best
to
way
talk
for
about
them?
that too.
Yeah, what's the best
Yeah.
way for them to get in touch?
You could go on my website, JB2investments.com or on Twitter at JB2 Investments, or you could look up my name. And then I have the ebook on there, and then I also have a blog with, I've kind of like downloaded my brain into these blog
Oh,
posts, so you could kind of learn a lot about what we're doing, and if you're trying to get started in the business, is a good way to get. I kind of make it pretty simple too, and digestible.
how do you find the blog? Is that on your company website?
Yeah, I just go to my website and there's a tab for blog, and it's
Oh,
there.
I'll definitely have to check that out. Moses
Yeah.
Kagan has got one, and it's great. It's like
I
amazing
honestly
education in real
used
estate.
his sort of as a guide with my own twist.
Yeah, yeah. I'll put links in the
He's
show
a better
notes.
writer than me, but I tried, you know?
No, he's great, and it's
Yeah.
awesome that people are sharing their not their I guess their playbook, but just what they know. It's such a great thing that people are willing to share like they do on whether it's a blog or real estate Twitter. It's super helpful.
Yeah, I think it's because like, a lot of people are, like, scared to share a lot of those things because they think they might be helping their competition, right?
Yeah,
But
yeah,
I think, what you get in return is much more than what you might be hurting yourself, you know?
yeah, yeah, yeah. Just kind of have that giving
If
abundance
you actually are,
mentality.
you probably aren't actually hurting yourself, you know?
Right, right. Yeah, so I will put links in the show notes to your blog, to Moses's blog, to the company website, so that people can reach out and keep their learning going, or even, like I said, if they're having a tough time, reach out to me, reach out to you. Happy to
Yeah.
talk to anyone.
I'm always happy to chat about that kind of stuff.
Cool, Jonathan. Thanks so much for your time, man.
Thank you.
Most people, if you ask them about taxes, my accountant deals with that. But the amazing thing is, the vast majority of accountants either don't know about this or don't know enough about it to recommend it to their clients.
Keith Wasserman said it was like the 10th wonder of the world, or something
Yeah.
like that, and I was like, "What? What is this cost segregation thing?"